Robert, thank you very much for your time today. 3 days of gains is what we've been seeing for the NSE 20. We have been seeing markets stalling somewhat, especially after the referendum, because we did see quite a few gains coming through prior to August the 4th. Do you think that these gains are sustainable, that perhaps the rally that we've been seeing over the last 3 days has some legs?
Good evening, Eleni. Thank you for having me on. Yes, we've seen a kind of bounce in the stock market from Monday to today. And what we see in the past 3 weeks since we had the referendum is a kind of loop effect, whereby the market had a bullish run. First week of August, we've seen, if you look at the trend graphs of the indices, we see the graph loop above. And then comes second week of August, we see the opposite, a loop downwards last week as the market corrected. This week again we see another bounce back, and I think it's very sustainable considering the volumes traded. I've spoken to the dealer here and there, looking at the volumes for specific counters, and I think we might see a trend persist maybe for another 2 weeks and then gain stability.
We have been seeing a lot of earnings coming through. To what extent have the earnings also been driving the markets higher? We know that most of the prices have been pretty much priced into the NSE 20. To what extent have they been impacting sentiment?
These corporate actions always have an impact on the investor perception, and in fact this time round we've seen a direct relationship. Taking Coop Bank, for example, having their results 57% pre-tax profit up, we saw the share rally from 15 shillings and 95 cents on Friday to start trading at 16 shillings and 30 cents. That was on Monday, and today closing at a high of 17 shillings and 50 cents. So indeed, these positive results have impacted the stocks they pertain to positively. We've also had ScanGroup, who released their half-year results yesterday evening with 36% growth, also record similar gains in the NSE stocks, and we've seen the share price again go up by about a shilling to trade at for 3 shillings and 75 cents today. So I think as days move forward, fundamentals are getting more bullish, and I think we'll continue seeing some of these results have a positive impact on the stocks.
You mentioned ScanGroup, 40% increase for the first half profits, and they're talking about expansion. We know that there's been fantastic recovery when it comes to the advertising demand, and not only in Africa, but also on a global level as well. This stock has been one of the favorites for investors. Do you think it's going to continue to be so down the line?
Yes, I think it has very positive prospects. Looking forward and looking at the industry it finds itself in, the advertising and media industry, we see ScanGroup as a very, and also being the dominant player of its type in Kenya, we see it having very good prospects. Again, they acquired Ogilvy and Mather. I think that will also boost up their earnings. And going forward, I think the company could see a lot of growth, especially vis-a-vis its stocks on the bourse.
Billings also grew by 21%, just really proof that this company is on a steady foot. What about the competitive environment there? Because there's also talk about a monopoly ensuing.
Yeah, there have been talks of the competition taking them to court, but I think those hit a snag. I think the processes they followed were legitimate. I think as a dominant player, they have set the ground for growth. And I think looking forward, looking at the industry, the more competition again that's there, the better it is in terms of quality and services provided. And I think this will be also a healthier thing for the company, rather than something to take them aback.
Because we know that the ScanGroup's shareholders approved that acquisition of a 51% stake in O&M Africa and, of course, a 50% stake in Ogilvy East Africa. So great prospects there for ScanGroup.
Yes. And in fact, also looking at their earnings, we saw their earnings per share were also up. I mean, from 0.6 shillings to 0.9, which is actually a substantial gain. And also looking at the stocks in the bourse, also from about 20 shillings in January to double that now, 50% gain in less than 6 months, which is considered by most analysts short term, is actually a good gain.
What about Access Kenya, Robert? Your thoughts on that company? It also came out with some good results today.
Access Kenya, on the other hand, unlike other companies that have had corporate actions, has not had such a a big move in share price, because we have Access Kenya trading today at 20 shillings, 21 shillings, more or less what it was, more or less of what it has been for about 2 weeks. And I think the perception of the investors on Access Kenya is that it's not such a good counter to get into now. That has kind of moved it from being a short-term speculative stock to more of a long-term investment, which I think is a good thing for investors alike. Looking at their results, we see, though not as flashy as they were, say, 2 years ago, the results are still good. They're still in profit. We have their gross profit up 27%. We also have their EPS up. And I also think they're now sorted with their boardroom issues. Their management has been streamlined. They're looking to also streamline their data services, in spite of all the hardships they found themselves with. So looking forward, I think Access Kenya is on a recovery path, and I think the company is good to go.
All right, reported 55% drop in those pre-tax profit numbers, but they do say things looking better as we go ahead. Standard Chartered Bank, one of the highest climbers in yesterday's session, up 5.3%. A highly traded stock over the last few sessions because their rights book is coming to a close in today's session. How did this stock fare today?
The stock, again, is expected with most stocks that are come rights for them to dip. It had hit an all-time high of 320 shillings some time back last week. It played around the 300 shilling mark for a while, and now we see it trading modestly below 260 shillings, 252 shillings. I think this is normal. It's a normal adjustment for the bank. We must remember the fundamentals are also quite good for it. We had the half-year results out, very good results, positive, 24% rise in pre-tax profit. I think the share uptake will be good. The ratio is good, one right for every 18 shares held at a discounted price of 165 shillings. I think that is really good. They're not looking to raise too much money. They want to raise about 1.2 billion shillings. I think they'll hit their target, if not more. And I think Standard Chartered Bank, the company itself, is really set itself as a big bank. And I think it's going to grow once they're through with this.